Hi everyone, hope you're having a great day today. I did promise to do a video on asset classes, and this is the video for you. Today I want us to focus on asset classes, define what it is, and understand how it works, and be able to differentiate the different types of asset classes. You'll understand that there's quite a number of asset classes or assets in the financial markets, and therefore it is important that we understand these things so that when we get into these things, we get into them knowing, we get into them informed. So basically, the 5 most common asset classes in the market will be your stocks, real estate, cash, bonds, and your commodities. Those are some of the asset classes that you'll be able to identify and you should be knowing by now. These are very common in the market. But what is an asset class? So basically, an asset class is a grouping of investments that share a similar characteristics and are subjected to the same laws and regulations, right? So it's the grouping of similar assets that share certain characteristics and are regulated or subjected to same regulations. So basically asset class is about separating an orange from a banana and from a plum. So you're trying to group similar types of assets, and then you give them a name and you call them stocks, and then the other one you call them bonds, the other one you call them real estate, and then the list goes on and on. Now, to make it easy for us to understand, the asset classes can be broadly divided into 2 main categories. And the key differentiator between these 2 categories is the level of liquidity. So when I'm talking about liquidity, I'm talking about the ease with which you are able to turn an asset into cash, right? So if you've got money in a bank, if you need it now, are you able to access it now? And the answer is yes. Then that particular asset, which is money in your bank account, is liquid, which means it can be easily accessed. But when you compare it to a house takes about 3 to 6 months to sell, which means that the level of liquidity is very low. It's to a certain degree illiquid. It's not easy to convert that asset, which is your property, into cash as quickly as you would want it. So the general or broad differentiator, or something that separates these 2 main categories, is the level of liquidity. I'll give you an example. So the first category is called your mainstream or your traditional asset classes. So your mainstream or traditional asset classes, most of us know them. That will be your cash, right? Your money market. It's your cash. And then the second one, it's your stocks, what we call shares. And the third one, it's your bonds. Now you can see all these 3 categories are very liquid. You can easily access them. If you no longer want specific shares, you can sell them today and get the cash. They are very liquid. So those are your traditional or mainstream asset classes, and most of us are familiar with these types of asset classes. That is your stocks, your bonds, and your cash. Highly liquid. And then you also have what we call alternative asset classes or alternative investments. Now, alternative investments are anything but these 3 that I just mentioned. They are alternatives to these 3 that I mentioned: the bond, the cash, and the stocks. So it's alternative. An example of alternative asset class will be like your private equity. Private equity, that's when you buy shares that are not listed on the stock exchange. If you've got such a share, it's very difficult to turn it into cash as quick as you want it, because it's not traded on the stock exchange, and therefore finding a buyer and a seller coming together becomes difficult. So it's not liquid. So other examples of alternative investments will be your crypto, will be your hedge funds, will be your private debt. So those are the types of alternative investments. So you've got the mainstream asset class, and then you've got the alternative asset classes. Now the question is, where do I start as a beginner? I would say as a beginner, rather focus on your traditional or mainstream asset classes, just to get the hang of the investment world, and because it is not as complex as most of the asset classes in the alternative stream. Alternative stream can sometimes be complex and very hectic, and some of them are still new. So to get the hang of it, you run the risk of losing your money in there. So rather start with your traditional or mainstream investments, and later use the alternative investments as a form of diversification, to diversify your portfolio. So you've got your traditional mainstream asset classes, and you bolster them with alternative asset classes, so that your portfolio is highly diversified. I'll do a separate video on alternative investments, but really today I just wanted to highlight what an asset class is, what categories do we have, and how do we apply them into our investments. So you've got your traditional, where you've got cash, stock, bonds, and then you also have alternative investments where you've got your crypto, property, commodities, hedge funds, private debt, private equity, those derivatives. Those are alternative investments, and they can be very complex. You need to understand how they work. You need to understand how to apply them into your portfolio. And therefore, as a beginner, my encouragement to you is start with your mainstream and traditional investments, get to learn as much as possible, and begin to create a portfolio from there. Start with your stocks, with your cash, and with your bonds. I hope this video helped you. Thank you. Bye.